I want to bring in CNN business reporter Rahel Solomon. Rahel, walk us through how all of this unfolded today.
Well, Jake, essentially what we're witnessing here is the mood worsen, right? Investors really search for the next sign of weakness, the next domino to fall. Now, to be clear, stocks did close off their lows of the day, but solidly lower. I think the Nasdaq actually closed slightly higher, which is interesting. But this is really just a confidence issue at this point. You can see that reflected very clearly in some of the bank stocks. I want to point your attention to some of the regional stocks that, Jake, you and I have talked about this week already. Take a look. First Republic Bank off 21%, PacWest off 12% on top of their lows, on top of their losses over the last 5 sessions or so. So it's been a real rough go for some of these regional stocks as we face this confidence issue in banking. But some of the larger banks also getting swept up in this sell-off today. Take a look. Chase was off earlier. Bank of America, Citigroup, Wells Fargo also getting swept up in this larger sell-off. Now, to be clear, Jake, Credit Suisse is a bank that has had significant challenges over the years, certainly had some scandals over the years. It's considered sort of the problem child of European banking. So it had its fair share of issues even before SVB's collapse, even before Signature. But what we're witnessing here is just how on edge investors are really about the sector and the outlook for banking. So really some confidence issues here moving forward.
And Rahel, the Swiss regulator just put out a statement trying to shore up confidence in Credit Suisse. What did they say, and might that work?
Well, that is the big question, right? So this statement coming out just about 30 minutes ago from Swiss regulators essentially saying, and the SNB, the Swiss National Bank, that the problems of certain banks in the USA, i.e. Signature, i.e. SVB, do not pose a direct risk of contagion for the Swiss financial markets. And here's what's perhaps most important, Jake. Credit Suisse meets the capital and liquidity requirements imposed on systemically important banks, essentially saying that its books look solid. But this is the most important thing. If necessary, the SNB, the Swiss National Bank, will provide Credit Suisse with liquidity. So you're getting some assurances there from the National Bank there, much like we saw here with our Federal Reserve.
All right, Rahel Solomon, thank you for that. CNN's chief White House correspondent Phil Mattingly joins us now live. And Phil, you've been speaking to top officials at the U.S. Treasury Department. What's their plan?
You know, Jake, what's interesting is what Rahel just read off from the Swiss National Bank actually tracks with what officials have been trying to make clear throughout the course of this day. And that is the fact that what happened over the weekend with Silicon Valley Bank, with Signature Bank, the problems we've seen in regional banks are not necessarily connected to what is happening with Credit Suisse. However, they are very cognizant of the fact, as Rahel was pointing out, that there has been a mood shift. There has been a difference in terms of how people are viewing the entire sector, and therefore any problem can create real risk, particularly one in the bank as large as Credit Suisse. Now, Treasury officials have been monitoring the U.S. exposure, the U.S. financial market exposure to Credit Suisse throughout the course of the day. They've been talking on a pretty regular basis with Federal Reserve officials, their counterparts in Europe as well, trying to ensure that the spillover risk is limited. And if there is spillover risk, they are cognizant of that fact before it really starts to spread, trying to make clear that these are separate issues that you're seeing right now, but also, Jake, very aware at the moment that there is just a general sense inside the market of anxiety, and they need to be prepared for anything that may come next.
Phil, has all of this made officials start to question whether they did enough just 3 days ago to stop this from exacerbating?
You know, what's interesting in conversations I've had throughout the day is that the short answer is no. And it's not spin because their view of it is the tools that they put in place, both backstopping the uninsured deposits as well as the insured deposits at the 2 banks that failed, implicitly saying that they would extend that backstop, that systemic risk exception, to other lenders that may fail as well, trying to restore confidence in depositors, making sure they start to put a halt to the significant outflows of deposits from regional and smaller banks over the course of the last several days. That they feel like has had an effect, has started to take hold. The lending facility they set up at the Federal Reserve has created options and created lines of credit for some of the banks that were most stressed at this point. So they feel like those were the right tools, the right answers. And it's worth noting, they were significant. They were very significant emergency interventions that were put on the table. And Credit Suisse and what's happening in Credit Suisse right now doesn't change their view that those are the right answers. I do believe in talking to these officials that, again, as we've been discussing, they are cognizant of the fact that their real concern, the real problem they face at this moment in time is perception, is panic, is people's perception of risk as this continues to play out. Even if they don't think necessarily these institutions are connected, these particular problems are connected, if the view becomes that the system is unstable, that it doesn't matter what capital a bank is holding or what the regulations are that are in place, then they have very big problems that can spread very quickly. If you look at the equities markets, Jake, and you look at the biggest banks taking a hit right now, whether it's JP Morgan or whether it's Bank of America, on the equity side of things, that is just not track with how anything has been going over the course of the last several days. Most of those major deposit outflows from those regional lenders have been going to those banks. They feel like those banks in particular are very stable, and yet they have also taken a hit. All of this kind of drives to the idea here that there is a shifting view in the marketplace right now, a very real concern about risks, a very real concern about contagion and spillover effects. They feel like the tools they've put in place can manage what they've been dealing with over the course of the last 4 or 5 days at home, but they know that things can spread, and they are very aware of that fact, and I think very prepared for that fact as well, Jake.
Presumably, Phil, the administration is discussing whether or not Congress should step in and legislate. Tell us about that.
You know, I think when you talk to administration officials, they say two things when it comes to the regulatory side or whether or not they would need emergency action from Capitol Hill. One, obviously, the president has talked about regulation and perhaps kind of putting back into place the 2018 regulations that were eased on regional banks and smaller banks under President Trump. That is certainly not something that seems to have any pathway forward, nor would it have an immediate effect about what we're watching and dealing with right now. When it comes to going to Capitol Hill for some type of emergency intervention or emergency infusion of cash, there just aren't a lot of conversations right now, in part because it's a recognition of the political reality in a divided government where Republicans, many of whom have already stated some opposition to what happened over the weekend, almost all of whom are deeply opposed to what happened back in 2008. And so there's no real move towards doing something like that. They also don't think that that's necessitated at this point in time based upon what they are seeing. It does raise a really good question, though, Jake, which is if they find themselves in a moment where that's what they need, that's absolutely what they have to go get, can they actually get it? And I don't know that the answer is yes at this moment.
All right, Phil Mattingly, thanks.